Hello, welcome to Poor vs. Standard. Poor here. Hope everyone's doing okay. Working on setting up a studio so you guys can actually see my ugly mug and I can relate to you better. Um, this is kind of the studio area. It's got a lot of remodeling to do, soundproofing and such. Have a lot of the equipment, just haven't had the time. And yeah, so we're gonna start, recording my ugly mug along with giving you guys the normal stock due diligence and all that stuff. So grab a seat, buckle in, let's do this. As always, this is not financial advice. Any and all opinions within this video, podcast, wherever you're listening to us, is for entertainment purposes only, so please don't sue us. Don't do it. And with that, let's get into it. So, as you can see, portfolio is up above 25K, which is nice. We're at 26 and change. We hit a high of 27K, and then we started coming back down a little bit because Palantir sold off and Tattooed Chef sold off, and we have pretty decent sized positions in those. But overall, it was a decent week, and Friday kind of shit the bed because the jobs numbers and what happened with that. So basically, the jobs numbers were about 500,000 off to the downside, and that was a massive miss. And that's not something that a lot of people like to see. The stock market typically did like to see that because that means that there was going to be no tapering by the Fed. But it's still, I think it was such a miss that people are worried that the economy is going to shut down again and this, that, the other thing. So impending crash talks sped up, things like that happen when you have a miss that significant. So I guess because the miss was not within certain parameters and it was such a big miss that we saw a lot of sell-off on Friday, and actually it wasn't really that big of a sell-off. It was just that some of the stocks that we've been started to correct, so not bad. We're still up on the week, and I guess the numbers for the jobs report was about a 250,000 jobs were added. They were searching for more like 750,000, so you were off by about 500,000 jobs. So that'll go well for everyone. Yeah, so that's all I got for that. And we also talked to the patrons all week as far as the different stocks that we're looking at, as far as the Tattooed Chefs, the Palantirs, the Smile Direct Club stuff. And I do want to actually take you on a little adventure, if you don't mind, where we will take a look at Bitcoin and also Cardano. So if you take a look at the Cardano chart, and this is on the 4-hour scale, you can see that it's been going in an upward trajectory on the 4-hour even. And so it's actually, like, back in August, we were down around $1.20, and ever since then we've had upgrades to the network, and we're actually in the middle of the smart contract upgrade. So you could actually see this balloon up to $5 ish, is what a lot of people are predicting, because of how it's going to be competing with Ethereum at that point. And I could see why. I can see the value, and you can look at the RSI and everything, and you can look at the MACD. MACD, we're about dead even. RSI, we're about dead even. So literally, if you take a look at this pattern, we could go either way with it. Like, it could go shooting up or it could go shooting down. But based on the imminent, I think it's around the end of September, based on the update coming, I have a feeling that this thing's probably going to shoot well past that $3 mark that it's been fighting to get and keep. So that's just something to keep in mind as far as Cardano goes. With Bitcoin, Yeah, there it is. I mean, that's the Mac Daddy of all cryptos right there, and it, you know, it tends to go higher and bring everything else with it. So as Bitcoin goes, so goes crypto mostly. And we're actually not in the oversold or overbought territories. We're close to overbought, but Bitcoin has such a history of just breaking through the overbought and like not even stopping. So you got to think of it differently than a stock as far as it's going to go like above that 80 on the RSI and not even think twice. So that's where you are with that. Bitcoin also broke 50K. Now it's at 51,600, almost 51,700, which is super awesome. Super happy about that. And yeah, for those of you listening and not actually watching, there are some charts here that I'm going over that you can see the trajectory of Bitcoin over the past, since August. It's been a slow and steady move up. Not as slow at times as some others, but there's a couple bumps along the way. But other than that, I can see Bitcoin going, barring any outside interventions, probably somewhere in the neighborhood of new highs with 75 to 100K by December. Maybe. But if that happens, I mean, Ethereum is going to go right along with it. And we'll take a look at where Ethereum's at. Yeah, so 3,900. And that'll break 4,000 no problem in the next, week or so, I would guess. And I'm pretty sure it already has. We're on a downswing, so we should be coming back up when it's consolidated. And weekends are notoriously good for crypto. I don't know why, but it's like they go down on Fridays, they drag down, then they start coming up Saturday, Sunday. And since this is a long weekend, Monday, Labor Day, and no one, can, other than those lucky Canadians, get to access the stock market, we are basically just sitting here watching crypto stuff because we can't trade stocks or options. So cool. Well done, Canada. But that's, you're probably going to see a lot more movement today than you would on a normal Monday, just because people are home and they can't do their stock market stuff. And those that are, doing the normal stuff, that's what they do. But as I said, it is Monday, Labor Day, September 6th, and markets are closed. So you're not going to see a whole lot of action and change. But things to look out for in the week ahead. Look out. Growth stocks got hit Friday, but they've been doing very well. I mean, you can't go up, up, up. So you're probably going to see a mixed bag of growth stocks this week, as far as one day they're going to go up, one day they're going to go down, one day they're going to go up, one day I don't know that you're going to see any discernible pattern as far as just up, 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 up. People do like to buy into runners, so if you see a runner or multiple runners on one day, the next day may run, and then you can have a consolidation. But if you find a good price point, like right now with Tattooed Chef at $22, I would still buy that. Palantir at $26.65. I'm not gonna continue to increase my position. I think it, short term goes to 30, but in a year from now, you could probably be looking at a $50 stock, so double your money in a year. Sure. But where I'm going to be placing a lot of my funds is Smile Direct Club, SDC. And I actually found this one well before even Jeremy of Financial Education found it. And I talked about it when it was at that $15, $14 range. I did a DD video on it, and I liked it then. It has since tanked, and it's about a third of the value that it was. It dropped down below $5, and I bought a boatload of it. And I will continue to buy into that. Probably some options too once they drop, because either this week or next week you're going to see the 2024 options drop. And with that, you're going to want to take a look at the stocks you like and see if you want to buy any leaps for those. Because if you can see a stock being worth double or better what it's currently valued at in 3 years' time, it would make sense to buy leaps in it. But you can't predict the future. You don't know what's going to happen to the overall market, if it's going to be bearish, bullish, what have you. And so that's the risky part of the leap. But if you know that this company's exercising, like it's doing well, it's, executing very well, and its financials are solid, absolutely. Now, with Smile Direct Club, SDC, it is a little riskier because they've been on such a downtrend. But I don't think it's going to zero, and based on where its competition's at, I see it going from where it is now to at least a valuation where the stock price is about 4 times what it is, at least. And that is, assuming they don't, sell any more shares or, dilute shareholders anymore or anything like that to raise capital. But they have a decent amount of money on the books, so I don't see why they would need to do that. And aside from, short attacks and that kind of thing, I can see this one being a very nice stock for that. I will be buying 2024 leaps on Smile Direct Club, absolutely. Now, GameStop, and that's up over 200. Very nice. And AMC is at $44, and Clover Health it's just under 9, is at $8.83. And the first two did very well over the last week. And there's a lot of talk about how the SEC chairman is working for the good of the ape movement, and that has yet to be seen. But he's talking about how pay for order flow kind of stuff is not off the table as far as like taking it away. That option has its ups and downs, but you would want to do your own research into that. I don't want to explain that and bore the hell out of you. But yeah, it's a very interesting time as far as the SEC chairman saying that he's going to do this, that, or the other thing in order to help the retail investors with an even playing field. If that's true, I hope it is, and I hope he does. But based on what I know of the hedge funds in Wall Street, they will always do their best to find loopholes that will screw over the, local investor, the retail investor. So I can hope, I can be hopeful, I can be an optimist, but I know I'm also a realist, so I take everything with a grain of salt. So there's not a real big update as far as AMC and GME, as far as what they're doing and where they're, like what their price targets are and things like that. I mean, you can't do any type of actual like DD or like charting on those because the fundamentals don't matter. A lot of banks have stopped covering them because the fundamentals don't matter. It's not about fundamentals anymore. It's about what's behind the scenes, what's going on, apes versus hedge funds. And to even fantasize about being able to tell you what something should be worth, I'm not going to play that game because I don't know. And anyone who tells you otherwise also is full of shit. So good luck with that. But yeah. So overall, not a bad week. Hopefully next week we'll continue the green patterns, and we'll try and keep you updated. I'm going to try and do a few more videos, but I'm going to try and do shorter form videos so you guys don't have like a 50-hour diatribe from me. And each video will be like a different kind of segment. Like I'll do one with like stocks I'm looking at, that kind of stuff, and just market discussions, general topics, things like that. And then I'm also looking at launching a options course for the YouTube. It's not going to cost anything, I don't think, but it's basically just going to be a bunch of videos that are a lot like the original podcasts we did, but with visuals, so you guys can see how options trading works on both Thinkorswim and on Robinhood. It's going to take me some time to get it all how I want it and done, so bear with me while that's happening, but it will come out, and hopefully it'll be let's try that again. It'll be very beneficial for everybody. So that's all I got for you. So if you have any questions or anything, you can reach out to us at poorvstandard@gmail.com. If you like what like what you see or like what you hear, feel free to sign up for our Patreon, and you can find the link for that in the description of the episode below. So with that, thank you much. Trade well, be safe, and enjoy your very long weekend.